morning, traders. Welcome out to your RBA rate statement. It's great to be here with you. So tonight, RBA rate statement comes out. You can see kind of where the market's at. 2.35, expected to go to 2.85. So expectations are, again, for that interest rate hike. Now, it's kind of an interesting, the news flow. So you saw the UK, the Bank of England, really flip a 180. Just a few days prior had kind of talked about interest rate hikes and a need to get inflation under control and to be hawkish and so forth. And the reason I say they flipped, well, what happened last week? Last week they announced a new bond buying program, and it's interesting how quickly the markets can move, but the bond market in the UK has just been frankly kind of collapsing and interest rates spiking higher, and they felt like they had to step in and stabilize because remember, the markets are based on buyers and sellers, and a big buyer of government debt has been governments, and now they're gone, and so you have all this selling pressure, not enough buyers, and it's been driving the prices of bonds down and yields up pretty dramatically, right? Interest rates go this way as bond prices go this way. And that's because when issued, if you have a bond that sells at $1,000 and when it's issued, it's yielding 5%, but then the same government or corporation comes out and sells a new $1,000 bond, but now the market forces them to pay 7%. Well, every bond that's out there at 5% is less valuable. They say, why would I buy your bond that yields 5 when I could go buy this new bond that's going to yield 7? And so as interest rates go up, prior, existing bonds values go down, and we've seen that. And so the Bank of England reversed course and they went QE. They went back to an easing policy, and that's a big shift. And so the winds are kind of changing, especially for international markets. Now, I don't think that the Fed is going to go full 180. I don't think the Fed is ready to start a bond buying program or anything like that aggressively right now. But international markets have been more stressed. And so if you're going to see these 180 flips and so forth and a change in policy, it's going to be in these international markets, and Australia being one of them, although they're not in necessarily a really bad spot. The UK and Europe seem to be more in the crosshairs of the problems. Is the Australian central bank, is the RBA going to raise rates? Yeah, probably. But it's interesting, the UN came out. And at first I thought this must be a joke or something that was misreported or something. But it's actually true. The UN came out and basically said that the Fed and all these central banks need to stop raising rates. It's going to create too much damage in the world and so forth. This is the United Nations coming out and requesting that. So there's a lot of pressure from a variety of different sources. Of course, these central banks are combating or trying to kind of bring down inflation. Whether or not they're doing the right things, I think they cause a lot of problems, perhaps more problems than they solve, unfortunately. But that's their goal. That's their mandate, is to get price back, in control. Remember, they want to keep full employment. They have that in pretty good order. And they need to keep price stability, which is keeping inflation under control. And on that front, they're really losing the battle. So I don't think the U.S. is in kind of a better position than a lot of international markets. The U.S. has some advantages in that, number one, the U.S. dollar is the reserve currency of the world. Number two, the U.S. dollar is a safe haven. So when people are stressed, they hide out in U.S. dollars and so on. The U.S. dollar, why is it stronger? Well, it's the largest economy in the world. It is the largest military, et cetera, et cetera. So it kind of has this safe haven status. And then the economy in the U.S. is not as damaged as Europe. We're not as close to Russia. We're not a big trading partner with Russia. We're not seeing all these issues with the war in Ukraine, and we're not getting a lot of energy from Russia and so forth. So there are just some things that are more specific to Europe that are problematic. So, does Australia go full throttle? I don't think so. I think, they may back off. Now, I'm not sure that they're going to do I would expect the forecast is probably right, but in the statement, I don't think they're going to be as hawkish as they would have been just a couple of weeks ago. I think they're going to start to kind of say, okay, maybe we need to back off here a little bit. Maybe we need to make sure that we're not just completely destroying economic conditions and so on. And I think around the world, there's going to be that kind of tone of, maybe we do need to still raise rates, but maybe we don't need to do it so quickly. And maybe we can kind of check the data out. So I think that they're going to have a little bit more dovish statement than they would have, again, just a few days ago. Things change, and things change rapidly sometimes in the financial markets. And last week was a big turning point. Just today, you saw a big change in the equity market. So if you were to look up, let's go, pull up a chart here of the S&P. The S&P, and I always say support and resistance is not a flat, it's not like it's a brick area, it's a squishy. In fact, usually when you get to a key level like this, you'll squish into support. It's like a mattress. You kind of go below it just a bit and kind of squish into it and then see the bounce. And now, why do you do that? Well, the markets have a perverse sense of humor to a certain extent, and they want to inflict pain. And a lot of people try to hide stop losses and get sucked in. This is a bear trap, is what we would call it in trading. And it happens a lot around key technical levels. This was the 52-week low. This was the major low. This was the lowest point in the downtrend and so forth. And so this was a key level that everyone around the world is watching that trades off of charts and markets. It makes perfect sense that you would squish below it, trigger stop losses, panic, get people saying, oh, it's going to be, terrible and so on. And then you come right back above and see these trapped bears. I think we rally, and I mentioned this last week in the midweek. I do the Wednesday midweek FX updates, right? And in the currency midweek last week, I talked about this inverse cup and handle. Okay, here's your cup. This would be the handle and so forth. I still think that rally is coming up there towards about 38.50, and then maybe we fail. And by the way, the third time you get here, it should really break down. But the first time, you've already expended so much energy and so much selling pressure just to get down here that usually you pierce it, but that's kind of like the exhaustion, right? Here's the big volume. It's like the exhaustion of anyone that's willing to sell sold, anyone that tried to hold on, got stopped out, panic sold, etc. And it's perfect. Sellers have run out of gas. Now buyers step in. And does it feel great to be a buyer? No, but I kind of suspect that's where we're going here in the short term. So I have these two kind of conflicting things, and that I think we're going to be on a little bit of a rally. That's risk on, and usually the Aussie would do okay on that. But I think that they're going to be a little bit more dovish, which is more bearish for the Aussie. So what I like is thinking about, if we go onto a risk on mode, what's been really hit hard that can bounce back? And I think we can play Euro-USD. And I also think it's supported by the chart. So I personally am a little more bearish on the Aussie, a little more bullish on the Euro. And I think we've got an opportunity. And so it's pretty much the currency that I'm watching here to trade tonight. So Euro-USD even has a little bit of, here's the resistance. This could be its own cup and handle type of thing. And we've already fallen back to kind of create a little handle effect here. Now, this is not as big picture and long term as, some other charts, but still, I think we're kind of at the levels where we can play it for a bounce. There's a couple of different thoughts that I have here. I do think we rally in this Euro-USD chart. If I come into a shorter term chart, let's go to the 15 minutes, what I was looking at earlier. You just have kind of an ascending triangle. I mean, it's a chart that I'm probably only playing this to be in it for the next few hours. And you have this ascending triangle. You see the higher lows, the flat top. We can play that for the breakout to the upside. That's one potential pattern. I don't even mind kind of playing it in the middle if we're maybe bouncing. Like here in the next couple of minutes, we're going to see this move. Imagine it rallies up. You're going to have this kind of hammer looking candle. I might buy in the middle here, still thinking that we're going up. Put my stop loss in here below. If we go just a little bit lower, we're actually going to touch that lower Bollinger Band, but we're still above this 50 period MA on the 15-minute time frame. So we would have a little Bollinger Band possibility set up on a little bit of selling pressure. The lower Bollinger Band down here, if we look at this lower level, that lower band is down at about, I'm going to call it 150, 90, something like that. So it's another 10 pips or so lower on a little bit of sell-off in Euro-Aussie. If the Aussie just rallies a little bit, knee-jerk reaction, you'd probably be touching that lower band. And I'm probably willing to buy down there as well here in the next 2 minutes. So one way or another, I think that I would buy. Now I'm going to do this on a different platform, but I always show it here. I would maybe get a buy order ready, and you could put in whatever quantity you're trading here, 4 lots or half a lot, whatever your position size is. And I would probably put my buy price a little above here where I'm just ready to hit transmit so that it will buy at that price or anything lower. Like say we come down here and hit the lower band, I can just transmit and it'll buy it down there. It's basically kind of is like a market order, but I have at least a limit. I won't pay any more than that in case the market goes crazy to the upside. I'm not getting some horrible slippage where I'm buying way up here and don't want to be. So I could use a limit order, put the initial price above, and just be ready to transmit at a moment's notice. My stop is pretty much going to go below this moving average. So my stop loss on this trade is probably going to be down there at about, well, there you go, Euro. So the Aussie is selling off. See how quick that moved? Holy moly. That's what we call energy. That's what we like to see. And that was an energy burst. So we have the right idea. It just moves so quick. I couldn't execute that trade. Probable that they didn't hike by as much. I think that's probable. What you're seeing here is that they probably didn't hike by even the 2.85 or 2.60. So there you go. That was kind of my guess, is with that type of energy reaction, they're selling the Aussie pretty aggressively. Told us that they're backing off. I wanted them to hike but then have that bearish. Now they probably did both. They didn't hike by as much and they're talking dovish, right? They're saying, hey, we need to slow this thing down. That's where worldwide economies are going. So this is the first meeting post the Bank of England shift, and I think there's more coming. I think there's more coming like that. Now we're in a difficult spot here. How do we trade this from here is an interesting question. I think you're almost in a kind of catch-22. If you buy up here, you could easily just get some choppiness to stop you out, and a stop loss would be just too far away for comfort to me. And if it comes all the way down here to the breakout zone, yeah, you can get in at your price, but it probably signifies that this is an exhaustion top, and we're just going to kind of chop around and hit a stop loss anyway. So I hate to say that that's a hard one to trade. The only way I would consider it when I do these and I really feel strongly that it still has more to go and so on, I would do a half position size. I would say, okay, I was planning to trade, at whatever it is, 4 lots. Well, I'll trade 2 lots instead. I would take my risk down by trading a smaller position size and then maybe have a little bit wider stop. That way I'm back in a reasonable risk to reward, a reasonable stop loss area, but that's a tough one for me. I wanted to trade this, but um, you know, it's pretty hard to be buying. I mean, think about it. If we buy here at 152.05, well, it's moved a lot. I mean, we were looking at this and it was trading at 151.15. Well, I mean, that's 90 pips difference, right? So where do we put our stop in there? Do we put a stop here that's like, 50 pips away, but then frankly it might easily be stopped out. Now, I do think this thing is going to climb up. I do think we're headed back up here like we had talked about. So you could make it work, but it's a difficult assessment there. I'd be maybe more inclined if you want to take the half position size and so on. I think what I would do is something that we talk about often. When you have a really big expanded range candle, you can break it into 4 parts. Okay, here's the upper 1/4. Here's the second 4th size. Here's the third 4th. This is the bottom 4th, right? And we try to buy probably right down in here, this second, 4th area, and maybe around the middle-ish. Be buying this around 151.60, maybe we'd call it, somewhere around there, as a half position size, and then putting your stop down here, 40, 50 pips below, something like that is probable, as to how I would look at this. I'm not sure I'm going to do that, but that would be my kind of instinct on this. So we came in with the right game plan. This is a case where a lot of times on these announcements, we don't want to have a position because it can just be instantaneous, like risk and reward, right? This would be a time where you would have been rewarded by having a position going in. So if you had bought somewhere back here and you were starting to make some money and so on, you had a little bit of buffer because where you got in and where it's at, it's already up for you. So you went ahead and held, something like that is reasonable that you could have been in. I personally am not. I don't have a position, but I'm not surprised by the reaction. That was really my focus tonight. Yeah, the stop loss has to be wider just because, I mean, a good stop loss in my mind for this trade is somewhere down here. I mean, that's really the ideal spot for a stop loss is somewhere down here just below 151, maybe around 150.90 or something like that. So that's an ideal kind of stop loss location. That, we thought we might be able to buy this at 150, 125. Now buying it up here at 150, you're paying 35 more pips. So if you still keep your same stop loss, you've kind of doubled your risk, basically. You thought you'd have about this much risk, and instead you're going to have about this much risk, right? You've pretty much doubled it. So by taking a half position size, well, you've doubled your risk, but now you have half the size, so you're back to your normal risk tolerance. Yes, it's a wider stop, but it's half the position size, so it equals the same dollars at risk that you were originally planning for. That's why it makes sense, and that's why you'd cut down the position size keep the wider stop, and now you're back to kind of where it makes sense and where you can operate. We're frankly right around those levels where if you're going to take the half position size, it was just back into that 150, 160 some odd level. So that's kind of where you'd be looking at potentially pulling the trigger. Again, I'm holding off for now, but I'm going to keep watching it tonight, and we'll see. I might pull the trigger on this, but I want to give it a little bit more time here and think it through. All right, we'll leave it there. Thanks again, everyone, for being here. Hope you enjoyed it. Good assessment, good game plan, quick, huge energy spike. We'd have to shift gears on how to trade it, but that's where the risk reward probability, we got to weigh those things, and if it still makes sense, we can pull the trigger. If not, we move on and find something else to trade another day, another time. Thanks again, everyone. Have a great night. We'll see you next time. Goodbye.